Without data, you're just another opinion.
Right.
Everybody wants to know, should I lower the price of my house, or is the market good or bad? Well, let's look at the data. Let's see where we're at. The data is showing that we're in a buyer's market for condos, but we're in a balanced market for single family. And so it's kind of interesting how you could look at Cocoa Beach, let's call it, and one's in a buyer's market and one's in a balanced market.
Welcome to the Studio 321 podcast, powered by Brightway, the Steve Trout agency. We're sitting down with real estate pros, insurance nerds, mortgage masterminds, and local legends who are making moves on the Space Coast. Hosted by the best insurance crew in the 321. At Studio 321, it's all about community, real connections, and sharing a few laughs along the way. Strap in, let's launch into today's episode. Before we get started on today's episode, I want to give a special shout out to my co-host here, Angela Delac.
Oh, okay.
We are celebrating her 40th birthday.
Oh,
When?
So,
Not today.
well, it was yesterday, but yeah.
Wow.
Happy birthday.
we're officially celebrating today in the office. We're doing an office lunch for her. So,
That's awesome.
Thank you.
Congratulations to Angela. Welcome to the
Happy
top of the
birthday.
hill. You know?
Seriously.
Well, I heard it's not the hill yet. It's a scenic route.
40's the new 20, let's call it.
That's
you know?
it. Absolutely.
Nah,
Absolutely.
I would say 30 just because I don't want to go back to my 20s. Yeah, I'm good with that.
All right. Today on Studio 321 podcast, we've got two great guests joining us who are right in the middle of the Space Coast real estate market. First is Zack Spurlock, team lead of the Spurlock team with Carpenter Kessel at Compass. Zack has been in the real estate business for over 23 years, and in 2025 was ranked in the top 5 realtors in Brevard County and recognized as the top 100 Compass agent in Florida. We're also joined by Mike Saggese, branch manager with New American Funding. Mike has nearly 17 years in the mortgage industry and has been a President's Council top producer every year since 2016. Today, we're talking about where the Space Coast real estate market is headed, affordability challenges for buyers, mortgage strategies in today's market, and the potential Florida bill that could greatly reduce property taxes in Florida. Zack and Mike, welcome, man.
Yeah.
Thanks.
What's up, guys?
There's some
Thank you for having
history
me.
here, huh?
Yeah, dude, absolutely.
I mean, we've seen some market cycles.
Absolutely, man. So me and Zack go way back.
Oh my gosh.
I was trying to
yes.
think like how long we've known each other. I mean, definitely high school, probably before that.
Wow.
Absolutely.
wow.
And then professionally, I
Yeah.
mean, from when we both started our career in the early 2000s.
Absolutely. We really started like right around the same time.
Yep.
I started in the mortgage business. He was in real estate.
Yep.
I didn't survive the crash of 2008 with the mortgage industry.
I didn't know- I didn't
Got
know
into
that. That's funny.
insurance. But yeah, man, welcome, Zack. Dude,
Thanks.
honestly, like you've been at the top of the list. I'm super stoked to have you.
I'm excited to be here.
You're a super, well-respected guy here on the Space Coast real estate. And so honestly, man, it's an honor to have you here. So appreciate you.
Thanks for having us.
Same to you, Mike.
Yeah, I didn't know that about you about the being in the mortgage business.
Yeah. So my background is actually mortgages before I got into insurance. It's really how I started kind of my professional career, really. And it really gave me like a great segue into insurance, and it really helped me early in my insurance career because I had so many relationships already established. So like I was a wholesale account rep for a company called American Mortgage Network,
Okay.
which got bought out by Wachovia. Wachovia ended up getting swallowed by Wells Fargo.
Yeah.
But yeah, so I mean that knowing all the mortgage people in town, because that was kind of my job,
There you go.
really helped me segue into insurance and really helped me hit the ground running. So, but yeah, and it also like for us, like we know the importance of what the mortgage guy's dealing with. You know what I
Right.
mean? From a
Right.
debt ratio standpoint,
Yeah, for
how
sure.
important it is for our numbers, and really for us to be partners, true partners in the transaction to try to get some deals done,
It can
So-
make or break it, like
Absolutely.
I was saying earlier.
Yeah.
You always got to know a guy or a girl, like
I was waiting for that.
You're gonna get in a tight spot, and
But
if-
and I never really said this, but thank you for not surviving that. We wouldn't be here if that
No,
wasn't
I
for
mean,
that.
honestly, like at the time, I mean, it was one of the hardest things I ever had to overcome. But looking back on it, it really made me who I am today.
Yeah,
You know what I mean?
absolutely.
That challenge really elevated me.
I
to the
remember
next
I had to
level.
pick up a second job. So
What was that second
tough.
job?
We were doing this drop your stuff off and sell it on eBay
Oh, okay.
thing. And so,
Yeah.
you know, still full time.
Yeah.
But yeah, that was an interesting time.
Yeah. It's funny because that's when you got out of the mortgage business. That's when I got into the mortgage business, was the spring of 2009.
Wow.
And I'd be telling people I'm going into the mortgage business. They look at me like I'm crazy. Like, isn't it horrible? But I learned from that point, and things have only just gotten better.
I mean, there was honestly nowhere to go but up from there.
Correct.
So like you've seen the bottom of the barrel, and you know what it's like, and if you can survive it through that and get started through that and make it, you're gonna do well, man.
There's very few people in the mortgage business my age that are in it that long, because in 2009, no one was getting into it. You were getting out of it for the most part. There's some guys significantly older than me that were in it and just kind of survived through it, but very few people were, my straight out of college, 21 years old, getting into the mortgage industry, because at the time it was, and we all know, it was really tough.
Yeah.
Yeah.
What I think is interesting, though, is like how the last few years has been a really challenging market for a lot of people, though. Yet, I see your business thriving. I know our business has been thriving.
No,
and
absolutely.
I've heard a saying that tough markets reward expertise. And I like to still feel like I'm in my 20s, and then I look at my balding head and I'm like, I'm not 20 anymore. I've been through some cycles, so.
Well, you do a lot of things, man, to keep yourself young, though, man. I mean,
you have to.
Yeah.
And I think kids keep you young, too.
Well, you were talking about, having a second job. I feel like you kind of always do them. You always have other things you're doing, right, to keep yourself busy. So like, I guess it's a good segue into it, but I know you do, a bunch of fishing and stuff like that. And you do like some spear fishing, and you collect lobster and all that for local restaurants.
Yeah.
Oh.
So that's a fun hobby
cool.
that, basically transitioned into, if I'm going to catch, be out there, I might as well turn it into a write-off.
Yeah,
and
yeah.
so you get a commercial permit, and all of a sudden it's a business.
There you go.
And so that's been fun.
I love it. That's freaking awesome.
That is.
Are you like, when you show up to the restaurant, are they like, jackpot, our boy's here, Like,
That's exactly what it is. And the unique thing about local fishermen here is you can't get out very often. Down in the Keys, they can go out and probably fish 300 days a year because the conditions permit.
Yeah.
But here, we might go 2 months and not have a single diveable day to catch lobster because we're not pulling pots like they are down south.
Yeah.
And so it's definitely feast or famine for the restaurants that want the local catch.
Yeah.
Mike, do you go out with him?
I have never gone out with Zach yet, but I do enjoy going out on the boat. I'm not anywhere near as much of a fisherman as him.
Yeah.
But I'm more
I'm
just
just a
hanging
boat
out in the river.
person. I'm not a fishing person, but that's pretty cool though.
I
Especially making money out of it.
remember when we were younger, Zach was like, "Man, come out on the boat with us, dude. We're gonna go wakeboarding." And I'm like, "I don't, I'm not really that good at it." Blah blah blah. He's like, "Oh, don't worry about it, man. We're all learning." I get out there, dude. Zach's doing like the Superman
hilarious.
stretched out, like he's rips on the board, him and Frankie Vanzara. And I remember just being like so intimidated that day, like I could barely get up on the board, and they're like, doing backflips and all kinds of stuff. It was insane.
That's pretty cool.
But it was a lot of fun. I had a lot of fun that day.
That is fun. I had an opportunity through Surfing Santas this last year to ride with Sean Murray. He was like the man from when me and Frank were riding 20 years ago.
Oh, that's awesome.
And it was a funny full circle moment that I've partnered with Surfing Santas on a business way, and then it's bringing childhood dreams come true.
Yeah.
Because we got to do something for Surfing Santas together.
What's really funny is, I never told you this, but when I bought my first wakeboard, as a teenager, it came with a VHS video of him of Sean Murray demonstrating how to wakeboard, how to jump the wake for wakeboarding.
That is awesome.
That
really
is
funny.
awesome.
Well, let's get into the market, man. So I think one of the things that is on people's minds is affordability.
Right.
What do you guys think are some things going on right now that you think will help affordability, or things that maybe are on the horizon? What are the challenges for that, and where do you think some things coming down the pike could help?
Mike?
Well, interest rate is one obvious one. They've been definitely trending down over the last 2 years. I mean, we were close to 8% and 8% in some cases. Now we're down to under 6%.
Yeah.
It's not obviously as low as it was during COVID, but it's definitely brought the affordability up. A lot of people who have been deciding to wait, I think, are now deciding to buy. I think Zack sees a lot of that right now.
Yeah.
But there's a ton of things we offer. One of the unique things my company offers to help people kind of get off the fence if they're thinking about buying but aren't sure about rates is we will refinance their loan for free within 5 years of them buying. So if they buy now, they take advantage of a good market, a buyer, a good price in the house, and then later, whenever rates do come down, assuming they come down within 5 years of closing, we'll refinance the loan for them for free.
Ooh.
Oh, wow. That's awesome.
That is good stuff. And then a stat that's always stuck with me is that for every 1% that the rates go down, it changes affordability by roughly 10%. And so, we're looking at buyers have 20% more buying power than they had 2 years ago.
Yeah.
So that's helpful across the board. I mean, whether you're buying in $300,000, now you can afford a $360,000 house, or if you're in $1 million, you're talking even more.
So you're I love the data you just gave. So 1% is 10% more of affordability.
That's right.
I
Yep.
love that.
And so that's huge. That's why we're seeing affordability get better there. And I feel like we've seen some positive changes in the insurance side as well. Would you guys agree?
Absolutely.
Yeah.
I mean, you want to
Yeah.
touch on that, Ann?
I mean, no, that's just, it's absolutely been very impressive what these carriers are, coming out with. I mean, new products, new like underwriting, things to help us get to closing. Just us working with the underwriters in general, that relationship with them is so important, just to get you guys to the, finish line. But rates decreasing. I mean, for God's sakes, my policy decreased this year by $500. And my husband was like, is this a scam? I'm like,
awesome.
And I was just like, no, it's not. I was like, this is pretty awesome. And he's like, oh, this is, and ultimately, yes, we are, we have every single carrier in the market and we love to reshop, but we love when we don't have to reshop. You know what I mean? We like stability, we like to, let people be with the carrier longer than 1 or 2 years. And that's definitely something that we are seeing light of, and it's encouraging.
Yeah, we're seeing our carriers get back to profitability, which is really good for the marketplace. It's going to create some stability for us on our side, which in turn creates stability for you guys. If our carriers can be profitable again, then we're going to see rate decrease in the future, more competition in the marketplace, just a lot of things that were really causing us to have such high rates and in such a quick fashion, right? Like rates really went up, 100% really like in a 2-3 year period. Shout out to the Florida legislator, Governor DeSantis. I mean, they did a tremendous job of riding the ship. I think they were a little late to it. They could have got ahead of it, but, the legislator is always reactive rather than proactive. So, we were ringing the bell years before the crisis, but unfortunately it had to become a crisis before something was done about it. But they really have stepped up and done the right thing for the people of Florida, and passed the bill that they passed really did a great job of getting the industry back to a good foundation, where now we're just in a really healthy place, which is going to again bring rates down, over the next couple of years, and just really have options again for people. 2 years ago, if there was a house, you might only had 2 or 3 options, right? And those options weren't real great.
Citizens was the main thing you were getting if you're on Merritt Island or Barrier Island.
Correct. And so anytime the state-run carrier is the only carrier of choice, it's just not a healthy place to be for the marketplace. So Citizens is shedding business like crazy. I mean, we're seeing, Citizens is almost as small as it's ever been now. And so it's really working, the health of the marketplace. Policies are moving out of Citizens into the private market. And that's really where they need to be. Better coverage options, better pricing, all that stuff. So, I'm really excited to be part of this business. I feel like I survived the toughest part, and now I keep saying it on this podcast, but this business is getting really fun again. And it's like we got the gas pedal down now, and we're cranking.
I love it. And would you say roofs are the main thing that was causing people or insurance companies to lose money? Like you would get almost like scammers that would go around and be a roofer, and they'd be like, "Oh, we can get your roof, and it's going to be $1,000." Because
there's no doubt roofs were at the center of the crisis.
Are they going to the actual cash value on roofs, or is that something that's just being proposed, or what?
No, so we do have a lot of programs that will do actual cash value on a roof,
scheduling,
or roof scheduling. So a lot of the carriers actually prefer roof scheduling because at the time of claim, it's very easy to know what the claim payout should be. So a roof schedule is like your roof's 5 years old, so there's a 70-80% reduction.
I love that idea.
Every state is doing that but Florida. I think we're a little.
Yeah.
It makes a lot more sense.
The challenge that we're having is just educating our mortgage underwriters and stuff like that. So a lot of mortgage companies want it to be full replacement.
Okay.
And so we get a lot of pushback there, and we work with our mortgage people all the time to either get them the information they need for their underwriter, or get them a policy with replacement. You know what I mean? So, but as mortgage. I personally don't love actual cash value or roof schedule. I just don't want the abuse of replacement.
Right.
You know what I mean? Like if we can get to a healthy place, and we are now, like I think what we'll see over the next couple of years as more competition comes into the market, you're going to have better coverages, back to replacement on roof with most carriers, you know? And because when there's not abuse, it makes sense for the carrier to have the replacement on there. You know, when it's a true claim, when it's not one speck of hail hit my roof and I'm getting a whole new roof that's 15, 20 years old, you know what I mean? And so if we can just get back to those things, because as a consumer and as an agent, you know, it's our job. We have a responsibility to make sure that our clients really are protected and have the right coverage, and we take that seriously. And I think for me to be able to do that, we have to get back to where we can offer those comprehensive coverages, you know, and I think we will. We will get back to a place where, you know, those things come back. And right now, unfortunately, you know, over time, over the last few years, carriers had to really figure out, how do we stay profitable? How do we stay in business? And they were stripping coverages back. You know, the coverages got worse and worse and worse. And I think as the market improves and as more competition comes in, part of that competition will be who's going to offer me the best coverage.
Right.
You know?
When you say guaranteed replacement, you're just talking about the roof, or you mean the bank having a problem with the policy because it's not a guaranteed replacement policy?
So it'll be replacement on the policy, but it like the overall, like say it was a total loss or a hurricane loss, it'll be a replacement. But like if it's hail or if it's an AOP deductible situation, it would be like ACV on the roof or roof schedule or something like that.
It's the specific verbiage that they see on the actual, coverage page that they just kind of like, we need more information about it.
Usually, what do they ask for, the cost estimator?
No. It's more of like, we need to know that the roof is actually at replacement cost.
Okay.
Yeah. So when they see the roofs at ACV, it throws up a red flag to them. Oh, we need it at replacement cost because, but there's some statutes out there that technically they can't demand that. And so it's tough. It's a tough deal because.
And there are lenders that have actually approved the roof scheduling. They haven't kicked that back.
Yeah.
So.
Yeah. It just depends on the lender and their internal guidelines and everything. But as far as my understanding is Fannie and Freddie accept it. So really everybody should pretty much.
And just as long as, we educate the consumer on what that actually looks like, I think that's important for an agent to, do that as well, because yes, there has been times where, we do things out of, maybe we had to do it because of a debt to income ratio and situation. And then they came back with a claim, and it's very important for us to educate them just so there's no kickback on that.
Okay. Yeah, of course.
So as far as affordability goes, what I'm hearing you guys say, we've got three things going on here.
Yeah.
Price, we can't affect the price because you can't tell somebody they need to sell for less. But we can affect insurance. We can affect interest rates, just by policy. And then the third thing is property taxes. Yeah. And that's a buzzword right now.
Yeah, absolutely. So I definitely let's dive into that because I think that could be one of the quickest pushes for our market over the next couple of years if that passes.
It's exciting. I get a little giddy when I think about it, but also a little nervous,
like a giddy person.
We talked about affordability, right? So when it comes to taxes, if a house has $1,000 less in taxes per year, the buyer can afford to pay $15,000 more for that house.
Okay.
Because again, what we're really talking about here is a monthly payment.
Right.
It's not just the rate.
Right.
It's not just the insurance. It's not just the taxes. But at the end of the day, if the client understands this is the monthly payment that they can go up to, that they feel comfortable with, having cheaper taxes or having potentially no taxes would make a big difference on how much they can afford monthly.
Right. And that, I get some pushback sometimes when somebody comes into Florida, they feel like we have high property taxes. And what washes that out is we don't have the state income tax.
They think we
Yes,
have
yes.
high-
Because, I think we're somewhere around 1.25% of the purchase price is about what the property taxes are, sometimes 1.5% if you're in a place like Satellite Beach.
Yeah.
But yeah, so property taxes are a little bit high here in Florida. But if that homestead gets reduced by at least half, which is what they're pushing for now, and my belief is that that's step one, and step two would be to eliminate all. And I think there's a lot of paths forward in that. And if that happens, if we think we've seen Florida with a boom in 2020, I think we will be looking for our second wave.
No, absolutely. I just can't imagine it not creating another wave. My long-term
And more
fear
people.
is, so let's play this out. So
I know that's
gives
the
me
downside.
anxiety,
I agree. Yeah.
I mean, I get Florida is built on we're a touristy state, but it's just it's just getting crowded.
Are you guys noticing a difference in traffic?
oh yeah, for sure.
Yeah.
I mean,
You don't have anything to
Yeah, he hasn't
compare
been
it
here
to,
that long.
but-
Baseline.
Yeah.
I mean, Vera used to be nothing. Mission Bay, and that's it.
Right.
So I live out in North Merritt Island, and traditionally out there, it's like, you'd be like 5 cars on the road.
Right.
And now when I'm driving around North Merritt Island, I mean,
Bumper to
sometimes the traffic coming in and out of the Cape or out of
And
the,
they're going to need to widen the Barge Canal crossover because I remember getting a pretty big backup there like a month ago.
They've had big plans to do that for a long time.
Right.
There's a ton of red tape, but they got to do something soon.
Yeah,
It's
Bavard's
bad.
not a secret anymore. I mean, it's
No,
it's happening.
it was like our own little
I know.
secret.
Yeah.
Merritt Island for sure.
Yeah, and if you get caught with the bridge up at the Barge Canal, I mean,
Your day's ruined.
Yeah.
Your day is ruined.
No, but I mean, I do think that if this tax thing passes, we're going to have a huge boom. My concern long term is that affordability short term? You know what I mean? Does pricing adjust almost as quick as the property taxes go away?
Yeah.
Does that make
I
sense?
believe they
Yeah,
will. I think,
That's a good point.
And so do we then, does it really solve affordability is my question. Or does it just make current property owners wealthy? You know what I mean?
Happy.
Yeah.
Does that make sense?
No, and I mean, and I don't have a degree in economics,
Yeah.
and I just my simple mind looks at Hawaii and places that I know. When I graduated college, one of my friends out there said to buy the starter house, let's call it, in the neighborhood that they needed to be, it was $1 million.
Yeah.
We're talking $1 million in 2002.
Yeah.
And so I was just like, that's impossible. Yet they figured out a way to do it.
Yeah.
And California, the same thing. And so, I just feel like it's going to sort itself out.
Yeah. I mean, I've always believed in the market will figure it out.
Yep. And that's what our whole society is based on,
Correct.
supply and demand. And, we saw prices come down by 50% in 2009.
Yeah.
And, whenever a true correction needs to happen because society says it needs to happen, it will.
Yeah.
Very true. Yeah.
Yeah, we'll see.
Yeah,
I'm glad I don't have to be the one that's like up there, flipping all the switches,
But I mean, I love the way the governor's thinking on it, though. The state is in a really healthy place, and why not figure out a way, to push that down to everybody, right?
Right.
And I do think in a short period of time, it will help affordability.
And for those of us that have, commercial properties or rental
still gonna
properties,
pay.
I mean, you're still going to be on the hook. It's
Yeah.
not like he's giving everybody a free ride.
Yeah, I wonder how that would play out too. I don't know the ins and outs. But
I've heard they're not going to change the rates
Yeah.
on
I was
those
going to
because
say
then
It's
that
just
raise
home
the rates.
yeah, they're not
Yeah.
going to increase the burden on those because that'll make rents go up because the landlord's going to.
Right, and it's not as much of a rate change as it is just increasing the effect of the homestead exemption, right?
Right. Well, they're going to have to get the money from somewhere. And,
Right.
I've been hearing different, options for that. We don't need to get into it
Yeah,
now
yeah.
because we won't be the ones that fix that problem.
Yeah.
I think there's a lot of ways that you could just get a little bit here and a little bit there.
No, absolutely. And get spending under control.
Right.
I mean,
that's
I don't want to get too
that's such a-
political,
yeah.
but, government spending is sometimes ridiculous,
Right.
and
People want to hear this good stuff, Steve. This is what's going on in the real world.
Right.
God, it's ridiculous.
we did talk about interest rates a little bit, but like, what would it do to the market if the interest rate got to like 4 or 5% again? And is it possible,
I think 5% is more realistic. We were kind of already there, just on the high end of the 5% range, depending on the type of loan, how much they're putting down, what their credit scores are, their credentials. I think 5% is really kind of a healthy environment for people buying a house. If you remember back in 2009, after after 2008, after the dust was kind of all settling, that's kind of where rates were. They were in the low to mid 5 range, and that's typically a sign. A lot of people believe it's a sign of a healthy market.
Yeah.
So do I think they're going to go back to 2%? I don't think so.
Yeah.
It's possible, but I don't think so. But 5% is definitely a good place to be. There's a lot of people either refinancing right now who got rates in the high 7s, maybe even 8, refinancing down over a percentage point, which is huge.
Yeah.
They go into the mid to low 5s, there'll be even more of that.
Yeah.
Not that, that's just going to help people who bought when rates were higher, really get a handle and better afford their current mortgage payment.
Yeah. Say you are somebody that has, like, let's just say a $500,000 loan at 7%. When is the right time to refinance that?
So you can't just refinance your loan because the rate's a little bit better. It has to be a substantial, they call it a net tangible benefit to the borrower. So you can be the greatest mortgage salesperson in the world, sell people on the idea of refinancing from 7% to 6.6. But when it gets to an underwriter, it's never going to pass because there's not enough benefit there for the person to to actually save money. There are some costs associated with refinancing regardless. There's transfer taxes. There's the fact that the loan is typically starting over with a new term. That costs them money if they're already, let's say, 2, 3, 4 years into the loan they have.
Yeah.
So I typically say at least a full percentage point, but the answer is different for everybody. It could be, some people may look at the savings on a full percentage better than they have now and decide it's not worth it for them. Because remember, when you first start, mortgage is mostly interest. As you pay into the mortgage, it becomes more principal. And as time goes on, more and more. So everyone's threshold for it is differently, but typically a full percentage point better. Usually there's a good benefit there for that at the very least.
Yeah, I would imagine like the cost benefit, say on a $200,000 loan, is way different than the cost benefit on $1 million loan or something like that. Full percent on $1 million loan can add up real quick. Right?
That's very true.
Yeah. So
the thing I like is the lender will pair with you and say, here's how long you have to be in the house in order to make this make sense. Yep. When I was looking to refi, I'm at 4% now because that wasn't even a good rate. Back when I bought my house, and 4% was okay, and then it dropped down into the 2s, and I looked at refinancing, but the lender said, you're going to need to be in this house for 3 years to make it make sense. Yep. Like, I've never been in a house 3 years. I'm not going to do it. And now here I've been in the house 7. So I should have done it. But that's kind of what you're going to have to figure out if it makes sense for you or not.
No,
how long you're going to be in there.
Absolutely.
So.
And Mike, I know you also you guys have kind of a special program that I haven't really heard other lenders doing. Can you talk about that a little bit?
Yeah, that's our NAF cash program. So that's definitely, we do everything, right? But this is something we do that's definitely unique. The way this program works is if a buyer has terms or for example, a sale contingency, they find the house they love, they want this house, but the seller of that house does not want to agree to go to contract with a contingency on the property they have to sell. The property could be out of state, it could be in Florida, it could be a condo, whatever it might be. The seller just doesn't want to agree to sell to these people because they have another house to sell and they want out now. So the way our NAF cash program works is we will come in and buy the new house, not the old house. We buy the new house for the buyer with our cash. We hold that house, allow these buyers who are buying it for to live there while the realtor sells their vacant, hopefully vacant house on the other end. Once that realtor sells their current home they live in, we resell the new house back to them for 2.2% more than we paid. So the cost of the program in Florida, no matter where it is in Florida, what county, it's 2.2%. So let's say they negotiate a price of $500,000 for the new house they want. We buy it for $500,000 cash, and we're going to ultimately resell it to them for $511,000. The hope with all of this is the fact that we're cash, we're removing the sale contingency and we're removing the mortgage contingency. The hope is they can get a more aggressive price on the house because we all know houses that sell for cash usually go at a better price. So for the right situation, the program could hopefully just pay for itself.
Yeah, absolutely.
But it makes it possible. A lot of times, the situation is the people didn't even list their current house yet. They're just walking into an open house on the weekend. They see a house, they fall in love. They decide this is the house for us.
Yeah. And then they're like, "Crap, what am I going to do?"
Now
with my current house?
they didn't even list yet.
Yeah.
Right. So a lot of times they're scrambling to list their house quickly, get into contract. Sometimes they're assigning the contract to us to close on it cash if their current home didn't sell in time. So they're trying to put their best foot forward, list it quickly, make it all happen. Because I'll be the first to raise my hand and tell you, if you can avoid the program, they're better off. If the seller of the house they love says, "We'll agree to your contingency," that's the best case for the client. Right?
I'm curious, how does insurance play a role in that if that NAF kicks in?
So what happens is they take a renter's policy on the house while they live there as a tenant of the property.
And how do you guys protect it?
We have our own insurance policy on the house. Correct.
Okay,
Yeah,
gotcha.
I gotcha.
Okay,
Cool.
Correct.
all right.
But yeah, it's a game changer for some agents. We do a training on the program. We want to make sure the real estate agent knows how it works so they can explain it to the client better. We make sure the clients understand all the ins and outs of the program because any situation where the bank is buying a house for you, there's a lot of legal, there's a lot of compliance, there's a lot of little intricacies on how this program works. I'm obviously making it sound very simple, but it's a tool for an agent to have in their tool belt to close more transactions where otherwise the people aren't, getting the house they want.
Average time on the market now for the majority of the areas that we're selling is 3 to 4 months. Find one of those houses that's been on the market 5 months. That's a seller that's
Motivated.
really motivated.
Yeah,
and
they
so
want
then
help.
you come in with a NAF cash, offer them 10% low. You've got an 8% delta.
Yeah,
they
absolutely.
make their money and you've saved 8%. So there's some really cool opportunities.
Strategy right there.
That's right.
And we supply them with our proof of funds. So we give you our corporate account with more than enough money to cover the sale price to submit with their offer that we have the funds to buy the home cash. So the lead time on the program is probably a good 5 to 6 business days just to get the realtor trained up. The clients, have
pretty
everything
cool.
explained to them. They do get underwritten ahead of time, which doesn't take us long, but we make sure they can qualify for the loan. Because how crazy would it be if we bought a house from the cash and they didn't even qualify for the loan that they need to buy it from us?
Yeah.
Ultimately,
true.
You guys buy the house and then they go buy their Mercedes.
Right.
Yeah, big no.
that would not be good. But it's definitely just a unique offering we have for clients in that type of situation. And again, a lot of people, maybe they own a condo and their family's growing, they want to buy a house. Condos in general, I think Zach will tell you, take a little bit longer in this market to sell. So that is a good fix for someone in that situation. And we've used it many times. I think that there's a big need for it, especially now in Brevard, where houses are taking, you said, on average 3-4 months to sell.
Yeah.
There's a lot of people who need to buy a new home, want to buy a new home, but aren't able to because their current home didn't sell yet.
Yeah.
Now you mentioned
And that's
condos real quick. Sorry.
Yeah, go
How
ahead.
long are condos on the market for?
They're even more. So you're looking at least another month to 2 months. And then one of the things I like about the company that I'm with, they're very data driven. And the statement that I've picked up from Dwayne is, without data, you're just another opinion. And so everybody wants to know, should I lower the price of my house, or is the market good or bad? Well, let's look at the data. Let's see where we're at. And so the data is showing that we're in a buyer's market for condos, but we're in a balanced market for single family.
Gotcha.
And so it's kind of interesting how you could look at Cocoa Beach, let's call it, and one's in a buyer's market and one's in a balanced market.
Yeah.
And so that's what we're seeing. That's what he's referring to, that they take longer to sell.
They do.
Yeah, absolutely.
Jeez.
So Zach, as the realtor in a transaction where you're going into you're helping a family, move from house to house. How do you approach that where they have to sell their house to buy the new one? Is that just normal operating procedure most of the time where you're putting those contingencies in? or how do you approach that, and what do you recommend to a seller that is looking to change houses?
It's going to be case by case.
Yeah.
If they're looking for something very specific, then I'm probably going to tell them to find something before they sell.
Yeah.
Because right now we do have inventory. So what I like about this market, even though it's what people are calling a more difficult market, it's a more normal market. You know, we're back to when I got into this business, it would take 6 months to sell a house, and you would do a 12-month listing agreement. Yeah. And then we got into crazy time where houses were selling in a day and no one had anywhere to go. So now we have the opportunity that there's inventory. So I would say if you're ready to sell your house, we're going to put your house on the market, and then we're going to go shopping, and there's going to be things. So I love that. And but if you're looking for something super specific where you want water on 3 sides and stuff like that, then I know if I sell your house, I'm not going to have anything to sell you. So if you're not open to keeping your cash in your pocket and renting for a little bit, then we need to buy first. We need to look at NAF cash, something like that.
Are people really are they receptive towards the the NAF?
It's an education process. So I've been trained in it, and now I'm training things. And like Mike said, it's more of like just educating the public and giving them options. If it's right for them, then
options.
Most people don't know that tool even exists.
Yeah,
it's all about just making sure they're aware of what their options are. Even with other programs, whether it's conventional FHA, VA, non-traditional lending, it's really the consumer needs to know what their options are. They make now an educated decision about how they want to do things, and it's just better for everybody.
So, man, both of you guys have really thrived over the last few years in this market, and it hasn't been an easy marketplace, to make it in. But you guys continue to get better and better and doing more and more business, right? Zack being a top 5 agent in Brevard County, which is absolutely incredible. Mike, every year on the President's Council, like those things aren't easy in a very difficult market. Like, what do you think what are you doing different? How are you getting there?
Yeah, I appreciate that. They say tough markets reward expertise. And, you and I have been in this business for quite a while, Mike, as well. And we've seen the cycles. And so a couple of years ago, people would just hire whoever was closest to them that also had a real estate license. And now I believe they're looking for strategy and guidance through uncertain times.
Yeah, no, absolutely. I mean, that the expertise has got to be kind of the differentiator, right?
It really is, because this is a big deal.
Yeah.
And 2022 market or 2021 made everybody look good because they're like, I just listed my house, I got 10 offers, and and we're not seeing that anymore. Yeah. Now we're seeing 50% of the deals falling through, and what do? I've got this place that I need to go to, and these, so it's definitely raised the bar on the difficulty, which is why we're seeing, a number of people fall out of the business, and then a number of other people have their best years ever.
No, absolutely. And two, like, I think not only, being an expert, but like, I guess part of being the expert is you are data driven.
Right.
You know what I mean? And so like
that's exactly it. And in the group that I'm with, they have just taught me so much. I joined them when I was almost in the business for 20 years. I thought I knew everything I needed to know. Yeah. And when I got there, I felt like a sponge. Yeah. Just different methods of doing things, and then truly just, bringing the data to me so that if it's time for a price drop, we're seeing how low should we go, or should we just stay firm, and so there's been strategy to every single thing we do.
So after 20 years, you're still learning so much in this industry.
Yeah, it gave me a total second wind.
Yeah, that's
because
awesome.
I was almost starting to go, well, should I get into commercial? Should I get into development? Like, because I was feeling a little burnt out, but I'm really fired up now.
Yeah, I mean, and like over the last few years, your social media presence has really grown. Like, you're doing an incredible job on social media. I think I pulled you up the other day. You have like 30,000 followers on your Facebook. I'm like, dude, I got like 1,000. Like, what's this guy doing? But like all the really cool things that you're doing to really set yourselves apart.
It just all ties in, you know? And so it's like sales breeds sales, and I know business breeds business, and you guys is, and, you know, and the lending side as well. And so, you know, our biggest thing that we say is your home either doesn't sell because price or exposure. And when we get the reach that we're able to provide people, we can take one of the elements off the table, and then we look at the data and we can say, it's your price, you know, because if you're listed with somebody, maybe they did an epic video, but it doesn't matter if no one sees it.
Right.
Yeah.
And so that's sort of the thing. And we haven't discussed this yet, but where we're seeing buyers come from, that's been a really fun thing to study. And that's part of the data. You know, we can say, hey, Mike's sitting next to me. He came from New York, and we know that buyers are coming from New York and California. But what the data has been showing is the Trojan horse is coming from South Florida right now. And so if you're spending all of your money target marketing California and New York, but you're ignoring South Florida, that might be your buyer, and they don't know your property exists unless they, you know, and what we're seeing right now is passive buyers. The active buyer is the guy who finds you on Zillow. So if all your agent does is list you on Zillow, they're only going after those active buyers. We want to find the passive buyers that are sitting on money that don't know they want it until they see your awesome video. So that's the game changer in real estate now versus 20 years ago, when we would just try to be on the cover of Homes and Land magazine.
Yeah. The one thing, too, I love about your videos that you do is you always, in the beginning of your video, one thing I've noticed is you find the one really cool, unique thing about the house, whether it's close to the ocean, you're carrying your surfboard to the water, or it's a golf cart community where you're on your golf cart pulling into the house. Like, I've noticed that you find that one really unique thing about that property.
Try to market the lifestyle.
Yeah, I was just about
and you're
to say
marketing
that.
the lifestyle,
Yes.
exactly.
Yep.
Marketing
And
lifestyle.
Otherwise, you're just another 4-bed, 2-bath house.
Yeah. Like I saw
so
the
true.
one recently. I'm, you know, Mark Codgen's like a brother to me, and you know, he's my brother's best friend. We grew up together basically, and you're advertising a house in his neighborhood.
Yep.
And I was showing my wife. I was like, man, this could be us. You know what I mean?
I went by. I was on my way to that shoot.
You're doing a good job.
And I stopped by Mark's house and said, "Can I borrow a longboard for a little bit?" So
I love
that
it.
was how that went.
That's awesome. Well, what about for you, Mike? What do you think the difference maker is, man?
I mean, I really try to take the approach where I'm giving as much value add to the client as I possibly can. There's a lot of mortgage lenders out there. There's a lot of good mortgage lenders here in Brevard County. The thing, whether I did it in New York or Florida, that I always stick to, that I think really differentiates me, is I really take the time with the client to sit down with them face to face. I try to get them physically in front of me, not just looking at an estimate over the phone, to explain things to them the way I would need someone to explain them to me if I was in their shoes. Because as a lender, we do this every single day, backwards and forwards, in our sleep with our eyes closed, you name it. And I think a big mistake is a lot of lenders typically take that for granted. They don't realize the average person doesn't buy a house, you know, every month, right? They haven't done, even if they bought a home before, it's been years. And no one really takes the time to really dissect the estimate and helps them really understand how they're making the decision on what kind of loan to go with, what lender to pick, what closing costs are, what could closing costs be, worst case scenario. Because, you know, human nature, you get an estimate from a lender over the phone, on the computer, whatever it is, you look at it, you just go to the lowest estimate. It's not always the case. You know, and a lot of times, if they don't understand that things like the impounds for the taxes or something as simple as the per diem interest can change based on what day of the month you close, what time during the tax cycle the closing lands on, that changes their bottom line, could be by thousands of dollars. So I try to be just fully transparent. I take these estimates, I color code them for people so that after I'm done, you know, overloading them with information, they can look back at it and say, okay, that's what Mike was saying. This is, you know, this makes sense to me now. I understand it, because that's how I would need someone to do it for me if I was in their shoes. And that's just one of the things I do. Besides, I have 17 years experience in the business. I've done this. I've helped probably over 1,000 families, you know, in my career purchase a home. That's my focus. I'm not somebody who's doing lots of refinancing. My focus is purchase money loans, which is helping buyers buy a home, whether it's their first time, their second time, so on and so forth. So I find that that's one of the big differentiators for me. It's not the company. I mean, although this is the best company I've ever worked for, it's really the individual and taking the time and holding the client's hand through what can be sometimes an anxiety-provoking, stressful process, and trying to just shed some light on it.
Yeah.
It is.
Yeah.
No, I love it.
And one of the things that differentiates a good lender from the pack,
I think you're segueing into my next topic, which was going to be how important is y'all's relationship to each other.
Okay. Yeah. And so it's an interesting situation. I like Mike. I like you guys, but I can never just refer one person.
Right.
And so because then all of a sudden it's liability on myself.
Right. Yeah.
And so so Mike is definitely in my, hey, this guy will take care of you. But also he's not going to get the day before closing and give you a new document that you have to run to the bank and scramble in the, ninth hour, and then you guys are always on it. Like you guys have our stuff ready to go with a bow on it before closing. And so that's just clutch, but it's absolutely not the industry standard, as you know.
I definitely don't want to be the person to hold closing up. That is a big no.
No, absolutely.
I don't want to be that person. So
No, I mean, who you work with matters.
It does. It does.
Know? And so I thought it was really cool when I invited Zack on the podcast, and immediately he was like, dude, I really want to get my buddy Mike on with me too.
Yeah.
So I mean, that speaks volume about your guys' relationship and how important these relationships are. Like, we're in a relationship business.
And it's at the end of the day, especially if you're recommending the lender, you're the realtor, you're kind of the captain of the ship. You're recommending an insurance company to your clients. You're recommending a mortgage lender. You're recommending a home inspector. At the end of the day, we are a reflection back onto you.
yes, exactly.
And if we weren't making you look good, you wouldn't want to recommend us to anybody else. So that's the whole idea is, to answer your question, my relationship with Zack is super important. I said this earlier before we got here. I mean, Zack helped me find my home. So I live in my dream home. I live in what I call paradise. I wake up every morning, I look out my window, I'm like, thanks to Zack Spurlock, basically. Yeah. Without him, this would have never been possible. And and it wasn't just because he was our agent, found us a house. He remembered very closely to what we were looking for. He must have been exhausted showing us a million houses. Yeah. And when the house came up that had really everything we wanted, he made sure we were the first people to see it, made the first offer, and we were in even a situation where the night, a few minutes after they accepted my offer, there was an offer better than mine that it was already too late. So had he not acted, Zack acted when he did, I definitely would probably still be looking for a house.
Yeah. Pretty fun story on how we met them too.
Oh yeah.
They were literally on a cruise ship in Port Canaveral was a port of call. I think we're the second largest cruise terminal now in the world. And so it's interesting. While he was on his port of call, his excursion was seeing houses with me. And we and then
that is
unbelievable.
And
that
then
is super cool.
He loops back through maybe 6 months later is when the right house came up.
Do you have like an advertisement on the cruise
No,
ship?
that'd
be a good idea.
It should they should offer that at the port.
They should.
Yeah.
That's a great idea.
We do dolphin tours and
we rented a minivan. We picked up Zack, started looking at houses. He was recommending, hey, go check out these restaurants to eat if you go anywhere. Like even, it was great.
Awesome. I love that.
So yeah, he's my first cruise terminal buyer.
That is a great story.
That is such a great story. Yeah. And our cruise port is insane right
it's
now.
Nuts. It's almost getting too big for me. Like I'm like, okay, don't start eating into the parking that our public boat ramp is, because we don't need any more cruise terminals. It's keep Brevard.
Every time you drive by now, no matter what day of the week it is, there's cruises in port loading people. And
we don't want to become Port
Westbound's packed, eastbound's packed. I don't even go to the island, and I'm like one of those people, like oh, I don't want to go over the bridge.
Right.
I'm like, I don't want to go over there.
Right.
But I love the progress. I mean, I love that our economy here is cranking. Our space center is on fire. You know what I mean?
It's awesome. Actually.
The jobs coming here. I mean, we have so much opportunity in Brevard County right now. It's just a really cool place to be. Do you think that's what's driving those people from South Florida? Because traditionally South Florida has been kind of the mecca, where people, I don't know, it just has like this, vibe and culture down there that attracts people there,
They do. They do have the nightlife. They have food that we don't quite have on offer here. Yeah. But when it comes to schooling, the girl Samantha Goldfarb that's on my team now, she came from Boca. And their public school systems had gotten to a point where you pretty much had to go private if you wanted a good school.
Yes.
Yeah.
And she has kids that are younger, below 10. And, Brevard County came up on the radar for good schools. And Now she lives in Satellite Beach, and they couldn't be happier. And their friends from South Florida are questioning them on, okay, how cheap was your house and all that kind
How
of stuff.
cheap is insurance?
Because
they
you're
are.
exactly right.
I know.
Insurance is
Oh
even
gosh,
more down there.
I know when people
So-
say like, oh, my house is in, I live down south. I was like, oh, this is gonna be a winner.
Yes, yes. So comes right back down to affordability. Affordability is
Yeah.
perspective.
Yeah.
And so where did you come from? He came from New York. Probably thought that this house on the water
Probably
was cheap
felt like he was
compared to-
stealing it.
Definitely was more. It's definitely more for your money than you were getting there.
yeah.
That's for sure.
Right.
And just like you're talking about Samantha, it was the same thing. We were looking for waterfront community in Florida where the schools were really good. We never heard about this part of Florida ever. Never traveled here, nothing. But came down on a cruise and basically fell in love. So it's like a hidden gem.
It
I think.
really is. We always have been
Yeah.
kind of a secret spot. Like we're surrounded by water. I mean, we just got really like, it's a beautiful place to be.
The wild card to me that is the biggest change, though, is this whole Elon Musk Bezos thing. I mean, to have the two richest guys in the world in a space race in your backyard, is wild. I mean,
No, it is.
When we grew up, it was. And did you grow up here as well? Okay, so you would get 2 shuttles a year, and it was like get the whole school out to watch it and just pray that everybody, makes it.
Yeah.
He's shooting these things up every 3
day.
days.
There's like 3.
They're right in my backyard. I mean, there's weeks where they're launching 5 or 6 rockets out of there. I mean, it's unbelievable.
Wow.
And I believe as far as the affordability goes, we're still cheap. So just 45 minutes south in Vero, you'll see houses that range from $5 million up to $20 million to be on the water. Here, 5 or 6 million is
Primo.
the most expensive, best place you can get in general. I mean, yes, there's some outliers, but I think we're going to be seeing those $10 million properties here, like sooner than later.
Yeah.
And
I
I wouldn't
agree.
be surprised if some of the money that drives it is money that Elon has created. Because I don't know if you've heard, but the majority of people that get hired by SpaceX, they get lured by stock, not by income.
I've heard that.
And so that stock is going public
I
this
just
year.
had this conversation yesterday with somebody.
And so the amount of millionaires that are being created from 30-something-year-olds out there that have been with Elon since they graduated, I mean, if they like it here enough, they're going to be buying Adelaide. They're going to be buying Riverfront. And, we're just going to see that.
I was actually talking to a financial advisor about that yesterday, and about he's got a bunch of clients that are in that bucket and are getting ready to become millionaires overnight.
Yes.
And we were talking about umbrella policies and some ways to protect them, moving
It's
forward.
exciting.
And so it is cool. It's really neat that's happening here on the Space Coast.
Absolutely.
That like literally that's in our backyard, like you said. And man, it's just wild. Like anywhere else in the country can't say that.
Right.
About the space race and all that. I mean, we're literally living it right now.
I just heard Elon's net worth went up by $500 billion more than the second, most rich person in the world. I can't even wrap my mind around that.
Yeah.
But it's all right here. He's pumping a lot of money.
Spread it
into
around the Space Coast.
That's right. That's right.
Yeah.
Well, guys, man, I really, really, really appreciate you. I'm actually humbled that you guys came in and spent some time with us, man. You guys are absolute rock stars. So we like to wrap up with kind of just like a lightning round.
Okay.
Sometimes.
And we didn't get a chance. Were those on the bottom of my email and I didn't get that far down?
No.
Okay, good.
These are like surprises, like
Okay.
catch you off guard.
Okay.
Unless
I'm not
is there
even
any,
gonna
well,
read.
before we go into the lightning round, is there anything else you guys want to touch on or let the people know about? Anything coming up for you guys?
I'm good.
All right.
No, I can't think of anything.
All right. Well, actually, before I can't let this podcast go without talking about your dad just a little bit.
Okay. Yeah.
We've all had mentors in our life and people in our life and business, and I know your dad is one of yours.
Absolutely.
And, your dad's an extraordinary guy, and I wanted to make sure I said that on here. I've always really respected your dad and always thought really highly of him. How has he shaped where you are and what you're doing?
That's awesome. Yeah, I appreciate the question. My dad was actually just calling me 5 minutes ago. I saw it light up. So he has been instrumental. I wouldn't be where I'm at today if it wasn't for him. And I actually didn't want to do real estate. I wanted to be my own man and do anything that what my dad did because I didn't want the handout. And in my third year of college, I started looking at what the other options are. And then I saw my dad doing real estate and construction. I'm like, so just started asking questions. Dad, what is it that you do? And then started shadowing under him. And then, he offered me $25,000 a year to come work for him, with a 4-year degree. And I was getting married the week after I graduated. Yeah. And so I took him up on it. And basically the rest is history. But we had our own boutique brokerage at one point, and that kind of ran its course. And then we went to more of the focus on sales instead of, running our own. And he's just been awesome. He's got a great reputation throughout the community as being a man of integrity and just, treating people right and being a hard worker. And then the thing that he brought to the table that I've been able to pick up on is construction background. So is this load bearing? What can be done with this remodel? How much should I expect to spend on a kitchen and a bathroom? And so
just
that
more
has been a
expertise,
differentiator.
like you were saying earlier. Yeah.
Yep.
Definitely a good thing to know.
So
for sure.
I just couldn't let this wrap up without giving a shout out to Mr. Spurlock.
Yep. Neil's the man.
Yeah, Neil.
He's still surfing with me and
That's
diving
awesome.
with me and all that stuff. Yeah, he's
That's incredible.
74, I'm guessing.
Good for him. That's awesome. That's
Still
awesome.
young.
Plus or minus.
He's going to kill you.
Let's get into the lightning round. Some of these aren't so lightning, but they're great topics for us to finish on. So, best restaurant on the Space Coast. Where do you guys love?
Best restaurant, Cuisine. It's at Satellite Beach, Indian Harbor Beach border, right on A1A. It's very unassuming. It's in this strip mall of just stores, but you go in there and you wouldn't expect it, but
Best
really good.
steaks around.
Really good
sure.
I
restaurant.
definitely got to
really good.
check it out.
Yeah.
If you're saying they got good steaks, that's my jam.
Yeah, steak's
Yeah.
my thing.
It's good.
Yeah. Definitely. Well, I don't even know about it. I have to, I'll put it on my radar now.
I don't know. The
pretty
picture
hidden.
looks kind of familiar, but I don't know where it's at.
What about for you, Zach?
Yeah. I mean, where I'm at a lot is Marker 24 because they're the ones that buy my my fresh seafood. Yeah. And so that's kind of a fun story though. I've seen them from the start.
Yeah.
And I sold them that property that was an old dilapidated marina down Newfound Harbor. And I mean, what Peter Black and his family have done to that is made it like a gathering place for the community. Yeah. So it's been just totally transformational to that strip of land down there. It's been fun to see it.
I've never seen.
awesome.
I mean, the first time we went was
It's an
when
incredible
we
place.
had a
The
team
atmosphere there, the vibe,
bonding, whatever. It was awesome.
Yeah, we did a team event there. I mean, it's a really unique place. Honestly, like on the Space Coast, I can't think of a more unique place than that. And it's unassuming. Like you're driving through a neighborhood, and all of a sudden you come to this just absolutely beautiful restaurant.
A little oasis.
Yeah, a little oasis in the middle of a street.
And Peter has the commercial snapper grouper permits, and so he uses that as an excuse to go fishing and supply the restaurant with fresh catch as well. So
yeah, that's really cool, man.
Yep.
Any other place you want to give a shout out to?
I like Coco. Daniel Pinovich. He's got just super. I mean, I think he's going for a Michelin star. And
wow.
So that's
I need to hurry up and get there before it does.
So I personally think Coco, K-O-K-O, right? In Cocoa
Yep,
Beach?
that's right.
I think it's the best new restaurant on the Space Coast.
Yeah.
Period. I love that place. Like when we went there, me and my wife were so blown away by it. Like we mentioned this on another lightning round on another podcast. Like that place blew my mind. The flavors, it's so unique. It's a different spin. Like it really is incredible.
Oh, you went for your birthday.
I took my entire family there. I mean, I had to take out a small mortgage, but it was worth every penny. Right. I mean, I'm glad you said Coco. That place is absolutely incredible. And if you haven't eaten there, you got to go try it.
And if you're in South County, have you ever been to Umami? Umami has phenomenal sushi as well. Okay. And that's
Umami. Is that the one in the plaza there by Ugali, right?
Yes. That's the new one, and then they had one out in West Melbourne as well.
All right. Yeah, we've been to that place, and that place is awesome as well.
So many great places.
We're getting a lot of good places on the Space Coast now.
No, it is. It's getting better. You were saying that we don't have as good food as South Florida, but I feel like we're getting there. And
we totally are.
Yeah.
Yep.
Ocean or river?
Are we talking fishing? Are we talking
Just ocean
Real
or river?
estate.
What do you prefer and why?
My gosh. I'm gonna have to go ocean because I can fish, surf, dive, all of it.
Yeah.
I'm going to say river.
All right.
Just I live right on the river. I would love going out there on the boat with the kids, taking them on the tube or to one of those little islands to hang out.
No, absolutely. If rates dropped, well, we kind of talked about this earlier, so it's not fair.
Yeah, move on.
But we're going to ask it anyway. If rates drop to 4% tomorrow, what happens to the housing market?
Prices skyrocket.
Yeah, prices are going to go up. The demand is going to increase to the point where the inventory will not catch up, and as a result, the prices are going to go higher.
Yeah, there will be zero inventory.
Yeah.
Yeah. This is kind of too easy for you guys, but favorite thing to do on the water?
That's hard for me.
Yeah, it's hard to pick one thing.
It is seriously hard, but I'm going to say spearfish.
Okay.
Yeah.
Ooh.
All right.
Just because my shoulders don't work as well for surfing anymore.
This is why I called it the not so lightning round, because I knew we were going to end up deep diving on some stuff. So if you were I remember you coming across a shark while you were spearfishing, and you had some incredible footage of that.
Yeah, this is the time of year, Steve, that it was in April. And so I just saw Blair Wiggins post something over the weekend that he came across a 15-foot great white, and he was maybe within 5 miles of Port Canaveral. Wow. And so this is the time of year that they're cruising, kind of migrating by.
Did you have to check your shorts after that?
Yeah. It was pretty unexpected. Wow.
Yeah. All right, final question. One word to describe the Space Coast real estate market right now.
I'm going to say stable.
Opportunity.
God, that's what I was going to say.
Yeah.
Good one.
Great, guys.
Great
That
time
was
to buy.
fun.
Awesome.
Yep.
Awesome.
Thanks for
thank you
having
for
us.
coming in. Thank you for helping us celebrate Angela's 40th together.
Yes.
Thanks, guys.
Yeah.
Welcome to the
birthday.
club.
Yeah.
Thanks.
But no, appreciate you guys. Super humble to have you here. And yeah, man, keep crushing it. Anything I can do for you guys, let me know.
Thank you.
Awesome.
Appreciate it.
See ya.
Thank you.
That's a wrap for this episode of the Studio 321 podcast, powered by Brightway, the Steve Trout Agency. We can't thank you enough for being part of our journey. If you enjoyed this episode, be sure to subscribe, leave us a review, and share it with a friend. Until next time, 3, 2, 1, we're out.